And Barry, thank you for joining us. I appreciate your participating. Why don't you start us off and just give us a quick intro on who you are and who First Federal Bank of Kansas City is?
You bet. I'm Barry Cooper. I'm the Chief Sales Officer at First Federal Bank of Kansas City. I've been in the role about 18 months. My background is primarily in cybersecurity and technology. I've worked for Fishnet Security and Optiv and then Fishtech Group before coming to the bank. So um, First Federal is very interesting. The why story for First Federal and me goes way back. My parents got their first loan at First Federal Bank. First Federal Bank's been around since about 1934, and we're primarily a mortgage lender. That's our DNA. We have about 11 branches in the greater Kansas City area as well. So a significant nationwide mortgage lending opportunity with us. And about, like I said, 11 branches in our retail. So I'm responsible for all of our lines of business, whether it's the mortgage lending, consumer lending, retail banking, as well as our go-to-market strategy. So I oversee our marketing as well. So fundamentally, I'd say that I'm a nerd, and that's kind of where I come from. That's my background. The bank had a great year, as you can see on the screen. In 2020, we had our best year ever. I'd like to say and take responsibility for all of that, but that's not necessarily the case. One thing that's unique is about First Federal is the way we give back to our community too. And we're very dedicated to home ownership and to helping communities prosper. That's what we do. And then, finally, I'll just say that, being a Kansas City Chiefs fan has been a little rough for the past couple of months. And so that loss is kind of stinging still. So I'm really excited to be with you today, Jeff, to talk about this important topic. And back over to you, sir.
Yeah, thank you. And I'll give a quick intro for me, since we'll be having this conversation together. My name is Jeff Keltner. I'm the SVP of Business Development at Upstart. I've been here for closing in on almost 10 years, I think, that I've been here at Upstart, since there are about 5 people. So I've kind of seen the whole evolution. In the quick history on Upstart, we founded in 2012, really focus on providing technology to banks and credit unions, but we'll obviously focus on banks today, that enable the origination of consumer loans, particularly unsecured consumer loans and auto loans. So that's really the core focus of what we do, working with banks like FFBKC and many others. And we went public late last year, so it's been obviously a great ride for us over the last couple of years. So I can't give you recent numbers. I'm prohibited from giving you anything after Q3 of 2020. But banks on the platform had originated nearly $8 billion as of that time, and we really focus on helping banks improve credit decisioning, improve the digital processing so we can reduce friction. You can see here 70% of loans that are originated by our bank partners are fully automated with no manual review. We do that with very low fraud rates. And so kind of applying AI machine learning to how we can actually help people originate consumer credit is really the core of what we do. So I'm going to stop the screen share. We're not going to do a big slide presentation today. We're going to make this an interactive dialogue. I do have some visuals if we have particular topics, but if, again, to the attendees, if you have questions, shoot them on in the Q&A or in the chat, and we'll do our best to cover those, as well as the questions I have prepared. But let me just start with this, Barry. You gave us a little. I normally ask you about your role as Chief Sales Officer, because it's not typically a role that I see in banks, or at least not a very common title. How do you think about what the real responsibilities of that role are, and how it compares to what maybe more typical titles are at different institutions?
Yeah, I think the CSO role, in cybersecurity, where I came from, it's very common to have a chief revenue officer, chief sales officer in the bank. I mean, that's pretty common, but for the bank and for banking in general, I don't see the role very much. But I think it's a role that is worth pursuing, and I think as well, in my opinion here, is that if you roll up, all the lines of business and you integrate that tightly with your marketing team, you just get like scale and you get efficiency there. And you also get, each of the teams not pointing fingers. You're all working for the same goal as well. So I think, organizations that aren't utilizing that role or don't have that role in place, I think they'd be well suited. It's well suited for banking, not just cybersecurity, technology, et cetera.
Got it. Interesting. So I want to start with this. We started working together to launch an unsecured consumer lending program at FFBKC a while ago. pre-pandemic, and I think we'll have to talk about what the pandemic has done to that business and where we've gone since then. But I'm really curious, just kind of what it was that made you think this was an area of lending that the bank wanted to get into, and why that was an important area for you to pursue.
Yeah, that's a great question, and that is the question, right? I think overall for us, you know, like any bank, and again, I'm not an accountant, but we needed to diversify our earning assets. I mean, we just needed to do that, and if we're truly about what we say we're about, and our MVV and our mission, vision, and values to help communities prosper, we didn't have anything here, right? We didn't have anything in this space, so we wanted to diversify our assets, and strategically, we wanted to begin engaging fintechs as well. I think as part of our strategic plan, we just saw and we see where banking's going. And one of the reasons I'm here now with a technology background is to help shepherd that. So part of my role is also, kind of playing the CTO light role a little bit as well. So when we go into these engagements with fintechs, there's someone with some experience and with some sales acumen that can kind of coalesce and bring those two things together. So for us, we saw this ability to grow our earning assets, and it just fit into our strategic plan of trying to engage, fintechs more deliberately rather than just a one-off and not intentionally.
Yeah, that makes a lot of sense. So we're also going to try to keep this a little bit interactive today with the poll. So I'm curious for the audience attendees here, how many of you are in the personal loan space or maybe there, but I think what I hear from many banks is we have it, but it's a product that officially is on the shelf, but maybe not of any scale or scope. So I'm going to see if we can launch a poll here and have the audience tell us, where is your personal lending business today? Is it something you don't do? Is it something you're in, but not really relevant portion of the business, or something you're actually relatively invested in? We'll give a few seconds. I will say, so I'll throw a little commentary while we're waiting, that it's, one of the things that's been interesting as we've gotten into the space is to see that it's one of the fastest growing categories of lending in the consumer space, really outstripping HELOCs and auto, not from a total scale, although it is now larger than HELOCs, but from a growth point of view, it's really where I think a lot of growth has happened over the last couple of years. I'm going to go ahead and close the poll out, and we'll share the results with everybody. So looks like this is kind of what I would say is typical in my experience. Some people who don't have it, some banks, the vast majority of banks, at least here today, have it, but of almost probably very small scale compared to the balance sheet overall. And then a couple, I'd love to know who the three are that have a large and growing portfolio, but that's certainly, we'd love to see more people in that category. So my second question for you, Barry, is as you looked at, fintechs and getting into the personal lending in particular, what was it about the program that we were able to construct together that was compelling to you in terms of working with Upstart versus other ways you could, other fintech relationships or other ways you could get into that, the personal lending space? And just for clarification, when I say personal loans, I had a question on this from the audience. We're really talking about unsecured consumer debt, right? So not auto loans, not mortgages or HELOCs, but that unsecured debt. And for those less familiar, the majority of the loans in that space today are credit card consolidation. So you got a lot of people who are taking credit card debt and rolling it onto a term loan, usually 3 or 5 year fixed, usually up to $50,000, maybe $25,000 is the largest loan, more typically 10 or 12,000. And then a variety of other use cases. We can talk about this too, Barry, where you see people, doing some home improvements, taking a vacation, buying a set of furniture, funding a wedding, things of this nature, where there's kind of a large expense and they're choosing not to put it on a traditional revolving credit, but to borrow specifically to the installment. But back to the question, as you thought about getting into that space, how did you think about how to do it? And what about the Upstart partnership made that an appealing way for you guys to enter the market?
Yeah, I think, for First Federal Bank, I mean, we're a community bank in the middle of the United States, Kansas City, Missouri. We don't have a lot of capability to grow new products and services ourselves. That's a struggle for us. We don't have a deep technology bench. At the time, were really outsourcing the majority of our marketing before I came on board. So we didn't really have control of our messaging, and we didn't have a well-defined or refined lead generation capability at all, right? So underneath in that environment, we're like, how do we get into this market? So, and then why Upstart, right? So for us, it was like, what we need are turnkey opportunities, right? To be able to build it ourselves, we're just like, that's a bridge too far. We're just not going to be able to do it in time, under budget or even on budget, and we don't really have the kind of expertise to do that. So, I think for us it was that, right? We needed a turnkey solution, something we could get to market quickly with. So we didn't have that bench, and then we're also, when you talk about partnerships, we look for strong partnerships, and that generally begins with people, right? And when we begin to engage, we looked around the market a little bit for what we wanted. We found, Upstart had a turnkey opportunity. There was a couple of others we looked at. Then we started engaging the people at Upstart. And for me, I'm from the Show Me State. I'm from the Missouri, right? So, we believe in, this interaction, this really kind of high touch, high quality transparency, right? And that's what was offered. So I think, we had this desire, we're looking for a turnkey solution. We found a partner that had the right type of attitude about a partnership, and that made it easy. So hopefully I answered that question, but that was it. The people at Upstart that I've dealt with are just passionate and dedicated about what they do. And if I come from the tech world, I'm looking for people who care, right? And they're going to stand behind their product, and they're going to help us. Again, when we can't help ourselves, which was really important.
Well, I'll just say likewise, we always look for good bank partners that have similar values and objectives. And I think the consumer oriented focus to getting the right product to the consumers that really is helpful to them is one of those things. We love to see partners they're aligned around that mission. So you mentioned being from the Show Me State, and I know we showed you a lot before we got live, but what have we shown you since you've gone in? Like, how has this program performed for you? Can you give us any sense of the scale and how the credit performance has been, or kind of just the overall objectives you had, and whether or not you're being able to meet those?
Yeah, I'm a former school teacher as well, so I always grade really severely, right? I'm a technology guy, so I'm a little biased, right? So I'm generally like very skeptical, but I mean, this has been, above expectations, and I'm not just saying it because I'm on the webinar today. It just has really worked for us, right? And and really, it kind of had to, right? We we don't have a lot of options, like I said. So, we have all the volume we can handle, the return and the ROA, and all of that is, even in a pandemic that has been just crazy. We were expecting, we would see a bunch of losses, and, we would have to really pivot and really rethink what we're doing with Upstart. That has not been the case. I mean, I was just, from a cybersecurity guy who looks at risk a lot as well.
Mhm.
The performance was outstanding. So as far as originations, production, quality, all of those things have been met and exceeded. So it's been awesome.
Yeah. Now just remind me, Barry, and we got this question from the audience as well. When did you actually go live into production? Like, when did you start actually originating?
We started originating. Okay, I knew you were going to ask me a question with a date, which are things I can't remember. It's been,
Roughly.
I think we're close to 2 years now. How about that? I'll go with that. We're really close, I think, to our 2 year anniversary, I believe.
So something like Q2 2019,
Yeah,
if
right
my
in that.
mental math
Yeah,
works right in yours.
yes,
So
sir. Yes,
clearly we had a good run pre-pandemic, and then a chance to build up some history, and then obviously some continued production throughout the pandemic.
yeah,
Um, and let's just talk about that. I mean, obviously in March of last year, we're coming up on, I think Friday the 13th is when my kids were sent home in 2020 from their last day of in-person school before kind of the world changed. How has that shifted your thinking about? We don't have to talk just about the Upstart program, but how is the bank responding to that, particularly from the consumer point of view? Because I know that for commercial lending and things like that, it's maybe somewhat less disruptive in certain ways, from the process at least, but that a lot of consumer lending was branch oriented, and now you've obviously those are not open, and so you really have to think about what are we doing to respond to the realities imposed on us by the current public health situation.
yeah. That's great. I mean, who knew, that the coronavirus would be, this severe, and it would impact, society the way it has. And hey, 2020, good riddance, right? I'm so done with this as well. But for us, I will just say, and um, it's really violently accelerated our digital transformation, right? It really had to. I mean, a small community bank in the Midwest, that has this dedication to, our consumers, as all institutions do. But, again, now suddenly we can't service anyone in a branch.
Mhm.
We can wave at you through the drive-through and we can socially distance there. We didn't even have any technology to be able to set meetings or anything like that. So some of the things we did immediately was we filled those gaps. We're like, we've got to get some appointment setting technology set up. We've got to be able to handle it in branch to be able to socially distance properly and still engage our customers, right? Practically on the marketing side, right? When I look at it, I see, we're a very traditional institution. Hey, if it's not on a billboard, we can't build an artifact. It can't be a white paper, maybe a blog, but those are digital. So I'm not sure we really, trust that. If it
Mhm.
wasn't that type of advertising, then we probably were averse to it. That is no longer the case. I mean, all of our digital channels now are just super important to us, and we're investing and all of those. If you think of, chatbot technology of whatever ilk you want to use on your website or your web presence, we had to pivot and be able to do that quickly. So, again, shifting our emphasis from kind of traditional marketing tactics to digital marketing tactics has been
Mhm.
huge. Um, and I think, Jeff, for us is like, what's going to be the new normal? When we do come out of this, our branch is going to be as relevant as they used to be, right?
Yep.
These are questions we're really wondering about. Sure, a lot of people, kind of flooded the bank with deposits, and we're grateful for that, and we want to put all that to work. But still, what is it going to mean for society? What is it going to mean for our customers long term? Um, as far as the Upstart relationship during the pandemic, I mean, it was kind of like, let's go. It was like business as usual. And you as the pandemic kind of took off, we saw some things that could have been potential risks as we were looking at the
Mhm.
portfolio. Those didn't manifest. Those just flattened right out, just in the way that the folks said they would, more or less. And then it's been business as usual, right? So hopefully I got to the crux of it, but I mean, it's really, we're trying to determine what's the new normal. Digital transformation's here to stay. I'm the champion for that at the bank as well. And,
Mhm.
so we are really attacking that as an institution, lock, stock, and barrel.
Yeah, I'm curious. Did you make shifts from a consumer lending point of view? And again, you can talk about the Upstart program, and we have a couple questions about specific to the program that we can get to. But I'm curious, were you tightening credit scores, limiting lending? Like, how did you think about limiting your risk? Particularly, I know we went through a period in probably April or May of last year. It was really scary when the unemployment numbers were really high, and I think lots of people were trying to think like, what do we do? And then how has your kind of thinking shifted as we've gotten to, I won't call it the new normal necessarily in the tail end, but we certainly are not in that moment when we're there 700,000 filings a week and unemployment, and we were all, kind of on the edge of our seats about what was coming next. How did you think about, managing your consumer lending portfolio in that time, and then how have you kind of normalized as you come out of it? Not out of it, but to something of a more stable position than we were in, a year ago.
Yeah, I mean, and just transparently, we were kind of scared to death, just like everyone else. When everyone who's got a loan suddenly is unemployed, that generally doesn't bode well for the future, right? So, we were tracking all of that, and we actually reduced, for a while, our production levels with Upstart. We're like, we don't know where this is going to go,
Yep.
and so we reduced them for a little while, and we're like, this is still working. This is still working as advertised, and we're still producing, and the risk is there, and we're still getting return. So we
Hmm.
just went right back to that current level. I mean, and the good news is, even in the pandemic, without the pandemic, of course, running its course fully,
Yep.
we doubled down as well. So,
Yes, you did.
we didn't just say, okay, we're scared for a minute, we're going to back off. We did that. The ship righted, if you will, to a certain extent. We went back to our previous production levels, and now we're doubling that. And we're even considering more as we come up into the end of Q1 in 21. So,
Yeah.
I think that's kind of just the key. If there's a story that folks could take away, I think it is just consistency there, production levels as expected, risk mitigation is quality. The automated decisioning and the credit decisioning is what you say it will be, which makes it easy for me to go ahead and go and say, okay, I'm going to take this to the board of directors and we're going to up our volume.
Yeah, that makes sense. I want to stop for a minute and launch. We've got another question, which is kind of like, I'm curious for the audience, and maybe we'll respond to the results here a little bit, Barry. But what have you done? I'm going to launch this poll now. From a consumer lending point of view, how have you stopped? Have you slowed down? Have you raised credit score requirements? Have you raised rates? What's the response been? So I'll launch that to the group and see if we get what kind of feedback we get. We saw the same thing, and frankly, on the lender side, even even we saw both on the lender side and on the capital markets side, a real pullback from capital, particularly in that kind of March, April, May timeframe of last year. And then, some returns as we saw things reaching a more normal level. But it's been great. And I was going to ask this because this question came in through the audience. What was the experience like working with Upstart through the, what are we going to do? How do we tighten? Do we slow down? Do we speed up? Like, how did you feel like we were able to support you through that kind of period of really unprecedented uncertainty in terms of what needed to be done?
Yeah, that's a great question. I mean, in cybersecurity, we always talk about fear, uncertainty, and doubt, right? And there was a plethora of that going on at the time. So the approach that Upstart took and continues to take, and one of the reasons I love this relationship is that it's very strong on customer success and transparency. So we're all sick to death of Zoom meetings. I am too. I'm like everyone else. I'm sick of them as well. But what Upstart and what the folks that we deal with did was they made sure we were on a regular meeting cadence. Hey, like we were meeting every week, and I'm like, oh my God, can we just maybe do this once a month or something like that instead? But during I'm grateful that that dedication to customer success, which I don't see a lot of firms have, is built into your DNA. And that made it, we were always close, right? And
Yep.
In times of combat, you want your soldiers right next to you, to the right and to the left, if you will. And so I think that approach of having regular cadence of meetings, being transparent about what you're seeing, being proactive even, and saying, hey, we're starting to see this. Are you all noticing it as well in other areas? That FUD, that fear, uncertainty, and doubt, right? That lowered the temperature there for us and gave us, kind of the, I guess you would say, the level of just comfort that we needed. So, I think that's kind of the story through that, and how Upstart communicated back to us and did it at a level that made us very comfortable.
Yeah, you might have found the weeklies intense, Barry, but I was in daily meetings with our executive team and credit monitoring team, looking at the reports, the economic data, and then I think I was sending out a weekly message to you guys about what we were seeing, not just in your portfolio, but in our overall platform, which obviously is a lot of lenders. So we could see broader industry trends and kind of product wide trends that we were hoping to be able to share and give you guys some sense, not just of what was happening in your portfolio, but what we were seeing in the industry writ large, and how we could think about that.
Yeah.
So,
and real quick, Jeff, even though I was like, hey, we don't want all this communication, we valued it after the fact, right? I mean, so, as much as I kind of griped at the beginning there about all the Zoom calls, it was just critical during that time. So sorry to interrupt, but
no, it's all good. So I'm going to share the results of that poll, and it's, I guess, I don't know if you have any reactions to this, Barry, but I think it's kind of what we saw. A lot of people slowing down, some people stopping consumer lending, and then what I would call all of the above option on, retaining risk, like raise credit score requirements, maybe raise prices a little bit. And then I think the thing you mentioned that I've heard from everybody is like, whatever our 10-year, 5-year digital transformation plan was, it's now a 2-year digital transformation process to go get in there. So I think that kind of matches. We did get a couple of questions specifically about your program from the audience. So let me just take these. Are the originations you're doing local to Kansas City? Or are you going farther afield to a broader audience? What's been your approach in building this portfolio?
Yeah, that's a great question. I mean, for us, again, small community bank, we don't, outside of our mortgage lending, which we are, want to leverage more as well. We couldn't originate in any other state except for Missouri and Kansas. So with Upstart, we're taking originations from anywhere, right? That's huge for us. I mean, you know, we're in our own backyard. We do really well here, but if we want to grow and do the things that we want to do as an institution, we need a product and we need partners that can help us extend our reach. And that's what happened there. So hopefully that's a good answer to that question. But I mean,
Yeah.
that's what we did.
Yeah, and the only thing I'll add to that for people's knowledge is we do allow our lending partners to either choose a geography if they want to stay within a footprint that they've been located in. That's great. They're welcome to do that. It obviously can limit the volume depending on how small a geography you want, but we have nationwide demand that we have seeing coming in for loans that we can help you utilize. And then we do have partners like FFBKC that are looking at this as a way to expand maybe beyond their traditional footprint and build a more nationwide portfolio that might be very hard for them to do absent a partnership like this. So, it's kind of a choose your own adventure, if you will, in terms of how you want to do that, but both are possible.
Yeah. And Jeff, real quick, just to add on a little bit more, as we saw unemployment numbers come in during the pandemic, we're looking at all of the areas we're taking Upstart loans from. So we're like, where are the hot spots, if you will? Yep. And do we want to take originations from there or not? And so, again, we had the transparency to be able to do that. We had the capability, luckily, to do that internally. And that was just important to keep the relationship close, for sure.
Yep, absolutely. And we did have a question, and tell me if you want to skip this one or I can talk about it a little bit, but what's your loss history been for the product? Like how have the losses looked? And obviously 2 years into an originations of 3 and 5 year loans, you're not at full maturity for the portfolio, but what's your history been in the loss perspective?
Yeah, again, I'm going to just have to beg and play the I'm not an accountant card here again, kind of to a certain extent, but the losses have been, within expectations. I think, if Upstart has if you could share, what you're seeing, Jeff, we're right in line with that. So we're right in line with what the industry is showing.
Yeah, and I just say generally the loss estimates for any given lender that we work with or otherwise is really something they control, right? One of the things we really work with for our partners is to use the machine learning models we have to estimate the risk of a borrower and then allow them to specify how risky of a loan portfolio they would like. And so we have on the widest spectrum lenders, you might see something like 8% annualized losses. And then we have lenders down at the 2 or 3% range. They're obviously able to serve a smaller set of borrowers because it's there. But the key thing I think is that we can help you predict the risk of each loan and therefore the portfolio, price the risk, and then take whatever slice of that risk properly priced you're comfortable with. And as I said, we have partners that are very broad spectrum in terms of the risk they're willing to take when properly priced. And we have other lenders who say, I don't want anything that's risky. I want a 3% loss portfolio. I don't care how much you price the riskier stuff. It's just not in my wheelhouse. And so that's really something each lender gets to control in the context of our program. And I think you can broadly do with credit parameters, though I will say in the context of unsecured lending, traditional credit metrics are not great predictors of default. And so you really, I think a lot of the special capability there is in really understanding the risk at a loan level that credit score and DTI as simple metrics will get you a little bit of the way, but they'll leave a lot of people out. And the last question I had here about your program specifically, Barry, was what were the startup costs or what was the process to get live? Was that, how long did it take? What was the expense involved in actually getting from, you mentioned speed to market is one of the critical factors in deciding to go this route. What did that really look like for you?
Yeah, that's another great question. I mean, for us, we had to kind of rally, some folks that maybe were not in their comfort zone to get in their comfort zone here. So, the startup costs for us were, I think, really kind of very low. When I think of things in technology, I think of, the PPT, the people, processes, and technology, and we had all of that. So, I mean, the startup was, really for us was the will to take a chance and do it, right? So, the startup costs for us were nil, more or less. I mean, very low to be transparent as well, I'm not the one who actually instituted the program. So I'm going to say that there was really very little cost on the upside. It was more kind of time and material. We had to get the right people in the right seats to manage it. So I think, and maybe Jeff, this is an area where you could help answer as well. For us, I think it was minimal to really to nothing to get moving.
Yeah, I think that's common. And I will say typically the longest pole in the tent the longest tent, but the longest pole in the tent for this is often the diligence process and reviewing. All obviously the Upstart platform in this case is representing rates to consumers, things of that nature. So getting through that review typically is longer than launch. We've certainly seen partners do it in a handful of months, both the review and the implementation. We try to make that as quick as possible. We can get people up and running in 60 or 90 days where they're able to move quickly. So that's certainly our goal with these programs. A couple of questions. So we talked about the kind of demand that Upstart's bringing. Is this something you're presenting to your customers, or how are you thinking about the Upstart platform in terms of, your more traditional, your consumer lending to your current customers and within the base? Is that something you're looking at, you're doing? Where are you at in that kind of life cycle?
Jeff, if I understand, are you talking about cross-selling or exactly help?
Well,
help
yeah.
me
I guess there's really two questions they're related that I'm getting. One is like, are you selling these loans? You're offering these loans to your current customers as opposed to just the demand that's coming through the Upstart program that we can generate? And I guess second, for the people we are bringing, are you cross-selling them other stuff? Particularly, you talked about building a national footprint. How do you think about, what your objective is for that, base of customers over time?
Yeah, that's a great question. I mean, for us right now, we are definitely marketing, this opportunity to our own customer base. And, again, a small community based bank in the Midwest, we have to take every opportunity we have to get signals, like customer signals and marketing signals from, our existing customers. And so we are utilizing, that data, and that data, and data is currency for us as well. And we're taking that to begin to build programs, bundling opportunities for other goods and services to them. One other thing earlier, when we were talking about the time to actually stand up the opportunity, I was on the board of directors at First Federal before I joined the bank. So I was like the technology guy on the board of directors. So from the time that, so I can speak to this at a little different level, from the time I saw it raised to the board of directors to the time we went live was, I believe, 5 months from that time. So for us, it was about a 4 to 5 month, if I remember right, 4 to 5 months to get that off the ground. So I wanted to bring that as well. And yes, we are definitely using the opportunity with Upstart to grow our prospecting customer list. We'd be dumb if we didn't. It's data. And we need to be able to utilize our data to grow our business. And we're doing just that.
Yeah. And then I've got two folks who want to know if you are servicing the loans or we are. So I'll let you answer that question.
I don't know, Jeff. Who is servicing our loans? Is it you or is it us?
I believe we are, Barry, but we do all servicing in the names of our partners. So we're operationalizing that. Interestingly, in this product category, something like 90% of borrowers end up on automated ACH. So a lot of the servicing is really just an automated payment processing system that's done. And then we do have a branded servicing interface so people can come in, make one-time payments, that kind of thing. And then, we'll pick up the phone when they call, and we have dedicated numbers for all our clients. So we're doing it on your behalf. And again, that's part of where that diligence comes in, where you're looking at the call scripts and the processes and all that. We do have some partners that service on their own, who just originate the loans and then pick up the servicing. And, we think for us, it's really about what's easiest for the partner and what allows them that speed to market, right? So, being able to ingest this, and maybe you don't have unsecured, term loans, you don't have the servicing protocol set up, you don't have staff that's trained, and that might be a longer time horizon than you want to get live. And so we can certainly manage that. And on the other hand, if for those partners who would like to do it themselves, like, that's great. I certainly think, when I hear, I'd be curious your thoughts on this. Barry does not see this question in advance, but I see a lot of the talk of digital transformation and people looking for unified experiences and unified platforms. It's really my sense that increasingly servicing is maybe the area where unification is most critical, at least being able to bring together all the products I have with the bank and present them in a uniform place and way, versus where I think some of the origination experiences being separated kind of makes sense. They can be optimized for that product, but I do feel like, you need to be able to represent all the products a customer has with you and give them that kind of unified view on the servicing side, which is one of those conversations I've been having with a lot of banks when they think about what does a digital transformation mean, and where do I unify, where do I buy, maybe partner with 2 or 3 different players for different products? How do I think about that? Curious if you agree or disagree with me on that.
Yeah, no, I agree with that 100%. I mean, and again, in a technology realm, like anything else, pretty much in business or life, do what you do well. and some organizations do components of this, and some technology firms really well. And where it makes sense, then you need to invest. And as far as unity of platform, and whether you're you desire to have fewer platforms, institutions and small institutions like ours would say, oh, definitely, we need to kind of collapse, if you will, if where it makes sense and where it's possible to do that. But not in all instances, and not all the time. So having the servicing capability pre-built, turnkey, again, utilizing that term, is super important.
Yep.
Super
So you
important.
talked about do what you do well. So I want to ask you this because 4 to 5 months is, I call it, on the better side of average for many of our partners in a review process. And I know we're not the only fintech partnership you guys have entered into, which in my experience across, the banks I've worked with, many struggle to actually get through the process, the interest is high, but the ability to execute across fintech partnerships, particularly bringing all the internal stakeholders along and getting everybody comfortable. Because it's not, I mean, I work the technology space. It used to be a CIO could buy my product. There's no one person in a bank that can sign a deal like that of any kind of fintech partnership. It's a lot of people. Talk to me about why you think you've been able to drive that successfully, what you do well, so to speak, in that category. Because it's certainly something I think a lot of banks would like to do more of, but struggle with how they actually get these deals over the line and implemented and successful, versus conceptual.
Yeah, I think that's a great question, and it's just key, especially when you're engaging in this arena. I mean, I always look for, maybe 5 or 6 key indicators and key things, right? First of all, the value proposition of has to align with our business model and to our strategic plan. So, if I'm looking for an opportunity with a fintech, or before I can bundle anything up and bring it to the exec team or the board of directors, you know, we have to have that alignment to our business model. And then I think, we're looking for firms also that have like kind of a dedication to customer success as well. I've seen this as be a big fail, where you see an organization that may have a great use case, you try to go and partner with them, and then it just becomes, a terrible experience, and you can't get anyone on the phone, and you can't get anyone to, to help you through the hard times, if you will. We're also I look for disruption. Being a tech guy, which is becoming more apparent as we go through the call today, I'm looking for people who don't do things the way they've always been done, and they're looking at orchestration, automation, and leveraging all of those capabilities. Whether it's ML, machine learning, or artificial intelligence. We're an old, very conservative Midwest. So when I'm talking to my board of directors about machine learning, they're giving me the kind of the dog whistle look. They're kind of turning their head a little bit, like, what is that? What are you talking about? Why is that important? But I think it is. I mean, these advanced technologies make decisioning in so many areas of the institution so much better. And as I mentioned earlier, a true partnership just begins with people, right? So if I can get, the proposition, the customer success dedication, and I can present this up and package this up to the board of directors or to the executive team and demonstrate the win-win. I mean, the business model has to align and work.
Yep.
The economics have to be there, or you don't even do it. That's what gets them won. That's what gets them over the line. That's what gets them implemented. And that's what gets heads nodding in the board of directors, and people saying yes.
Makes a lot of sense to me. And I think we were lucky to find a good champion like you, because I think having the right champion internally in my mind who can really drive this and knows how to navigate the organization is really critical. And then I've got one last question, then we'll open it up. So if the audience has questions, I know there's a couple in there that I haven't answered that I think we'll get to, but if you have other questions, throw them in. So my last question for you, Barry, where are you seeing the big investments for the bank over the next couple of years? Like, you're here now. Are there areas you think others are over-indexing, under-indexing? Like, where do you see the big opportunities and the places you're excited to be investing over the next 3 or 5 year time horizon in terms of opportunities for the bank?
Yeah, I mean, for us, it's to accelerate our digital transformation, right? I mean, of course, it's a tech guy, but I mean, I'm responsible for, all of our go-to-market and all of our sales and all of the lines of business, right? So, I've got to have technology, and I've got to have, it's the PPT, it's the people, processes, and technology, but we're going to focus on continually digitally transforming in whatever way that is, right? It could be automation and orchestration in our operations, which it will. We've deployed data analytics tools and business intelligence tools. So we're now ingesting data from all of our different core platforms, including, may I add, with Upstart. So Upstart offers an API. They also offer, a really nice business intelligence platform, but to correlate and aggregate all the data that we want with other signals from marketing systems, core systems, we need to be able to grasp and bring that system into a data warehouse. We can do that, right? So we're going to continue on looking at data as currency. We're going to continue to look at disruptive systems where we're going to deploy a new, what we feel like is a disruptive e-banking solution for, in the future, in the next 6 months. We're also looking for consumer lending, something that's very customer centric, something that really is frictionless, if you will, which is big for our organization. So consumer lending, we're going to roll out an e-banking platform, mobile banking, online banking that are very different. We're not going to go to kind of status quo. Like there's a bunch of players in that space that we could jump to and be, hey, we're good. We're kind of equal to our competition in our marketplace, but we're actually going to lean forward and take it a step beyond a technology we feel is very disruptive. And we're going to play some bets. And I would say just, Jeff, overall, we're open to more risk now, overall, whether it's in the digital transformation space, whether it's in new goods and services or partners that we're looking to build relationships with. An old, kind of more, I don't say old, but an older conservative bank in the Midwest, we've got to do that. We got to do that. Survival depends on us being able to do this well. And so we are going to do it, right? And we're going to look at the new goods and services that Upstart has. The auto lending thing is very interesting. The decisioning on the back end, decisioning as a service. I'm not saying that's a product you guys should build, but Jeff, but maybe it is, right? That we could use for other things like a customized digital or consumer lending product that fits our needs. So hopefully that helps. I mean, that's really what we're looking to accomplish. And we're not going to slow down, and we're going to serve our customers well. We're going to do.
I think it's smart, Baron. I'll just say, I think one of the things you said, more open to risk. I think one of the things we often do is we under-index risk of the status quo in the current course and path. Exactly. We tend to think of that as the lack of risk path. And I think particularly in a moment of, dramatic change, there's a lot more risk in that path than you might think. And you've got to really index the risk of doing something very different versus the index of what happens if I don't, and I'm left behind. And one interesting stat that I saw today, my data team is going to kill me, but because we haven't fully vetted this all the way, but we see upwards of 60, sometimes 70% of the traffic coming to check rates for the product on our website, it coming from mobile devices, right? And that's kind of stunning, the shift that there are still many places, many institutions where you can't check from a digital device. You're right, and we now see the majority of that traffic, sometimes quite a large majority, coming not just from a mobile device, but actually coming from, or not from a digital device, but from a mobile device, right? And so, if you go out and say, hey, we've gone digital, you're going to go, oh, shoot, we got to go mobile too. So I do think there's this moment of, profound change. COVID has accelerated that, right? There are people depositing checks with their mobile, grandma and grandpa are depositing checks on a mobile phone that you never thought would do that. And do they come back to the branch in 4 months? Yeah, I don't know that they do, right? I think many of the use cases are going to be more stable than we think. And so you got to get ahead of some of those trends.
That's right. I mean, I'll just add in, we're also investigating, what I'll just call remote live banking. So if we want to leverage, digital opportunities, what our data signals tell us from our Upstart data or our mortgage data, and we want to be able to bank customers. And I always use Tupelo, Mississippi, because that's where Elvis was born, But if we want to bank people from there, we need to have the ability to do so. So, I mean, real-time, live type banking, remote banking capabilities is in our future as well, for sure.
Got it. Love it. Well, I'm going to open it up. Jenny, I know we've got some questions from the audience. I can pretend, make up my own questions if there aren't some good ones, but let's open it up to whatever I haven't covered. I tried to weave some stuff in throughout, but hopefully there's a couple of questions we can get to that people have out there.
First question is, the government stimulus programs have added a lot of liquidity to the system, including to consumers. Would you expect the loss rates to increase once the effects of the stimulus wear off?
It's a good question. Barry, do you want to answer that or do you want to make me answer that?
I'm just going to say if the stimulus ever stops. So I'll just start there, and then Jeff, maybe you can take it from there.
Yeah, I don't know if I phrase it quite that way, but certainly we've got it looks like a new stimulus coming, and signs of reemergence of a more traditional set of economic activity on the horizon. So, it's a good case to be made that those two things will bring us back to the new normal that looks from an economic macro condition point of view, something like the old normal, without too much disruption. Just for a quick peek, I'll pop up some numbers on what we really saw in this is not the FFBKC program, just to be clear, this is kind of Upstart platform wide. But what we really saw during the COVID, you can see here, percentage of the portfolio, and this was a metric done by a company called DVO1 that allowed us to compare across some competitors in different platforms. But we saw what's called payment impairment. So anybody who was late, whether they were delinquent or whether they went into a hardship program. And our portfolio writ large, and again, every lender can have a subset of this risk, was something like 6% pre-pandemic, accelerated to 12. And you can see the light gray bar here is the hardship program. So really, a whole bunch of people enter the hardship. Not a tremendous impact on actual rates of delinquency. We just saw a lot of people added to hardship programs on top of the delinquency. We peaked around 12%. In May of the portfolio last year. And we've been on a gradual decline. And as of September, and again, I don't have data after Q3 of 2020 because we need to report our earnings before I can show you guys that. But we're back to basically normal with 1% or less in the hardship program, 6% overall payment impairment. The other stat I can show you from this particular analysis was that we're now seeing this is percentage of borrowers who entered a payment program who have since recovered to making on-time payments. And for Upstart's overall platform, that's around 95%. So we've seen very little actual loss to the portfolio driven by COVID. We've seen pretty much no impact to returns. I think, as Barry mentioned, they didn't really see any change to the returns. That is generally true for us writ large. And so I think we feel like the portfolio has been through the big stress. We feel like the hardships and recovery is a pretty good metric. Now, I am always cautious to say two things whenever I talk about macroeconomic conditions, and those are, number one, the future may not look like the past. The next recession probably won't look like the last one. So, predicting the future based on this, it comes with a lot of stuff. And secondly, we're clearly not through the end of the pandemic. I mean, my kids are here in my house today because they're not in school. So, tells you a little something about the fact that we're not back to total normal. But we feel pretty good that the future won't look a whole lot worse than the past, and that we're in a good position, at least as we see it so far today. Not being a crystal ball kind of organization, I'm not going to make too many predictions, but that's roughly what I'd say on that topic. I was going to say, I've got a question that was texted to me. It said, Barry, I heard you mention that you doubled volume. Can you explain what the process looked like? How long did it take you? What did you have to do to actually to double what you were doing?
Yeah, that's a great question. I mean, again, the pandemic, kind of threw everybody a little bit, especially where we have this new relationship with Upstart and we're going to do all of this. And then, wow, what's this really going to mean? So I think the decision was easy based on the stability of the portfolio and what happened and what actually happened, right? And, there was what we thought could potentially happen and what losses we might take. There was what actually happened. And then whenever, for us, whenever it was like, hey, again, I think the earlier question speaks to, we're kind of flushed with deposits. We have money, let's put it to work. That's a determinative factor as well. We were just like, let's put some more of that money to work. We don't see a lot of risk here. As much risk as we think we thought there was going to be. So let's go ahead and do that. So I would say the decisioning for that was a much smaller, let's put it this way. The level of effort to get that decision made was minuscule. I had to have maybe 3 to 4 conversations. We talked about it with our partners at Upstart, which we still have recurring calls now that are every 2 weeks instead of every 1 week, right? And we got to chat about it. We got to discuss it. What do you all think? Would you be open to it? Then we took that back in. So, I mean, it was really, we looked at the past informs the present and the future in this particular endeavor. And then we went ahead and placed the bet and went for it. It was very, very easy to do. And I wouldn't anticipate that's going to be the last change for us this year. I would anticipate we're going to grow and probably grow considerably in the next quarter.
I got my phone ready for your call, Barry. You just let me know. From our point of view, we can ramp volume within limitations within a matter of weeks. So it's a pretty short order from we'd like to have more loans coming through our program to being able to turn that on. If you ask for billions a month, that would be harder for us to generate on an instantaneous basis. But most of the bank partners we're looking at are looking at 1 to 10 or 15 million a month, and that's a kind of volume that we have very easily available for our partners. So we can move very quickly to do that.
Yeah,
All right,
that's
Jenny,
a matter of weeks, like you said.
Yeah.
Jeff, that was like 2.5 weeks, and we were up and running with a higher volume.
Sometimes we do it even faster, depending on how exactly how much where we're at in the month. All right, Jenny, are there other questions out there for us?
There are. I think this is directed to Barry. Does Upstart help you navigate state lending laws?
Yeah, that's a great question, and maybe just a smidge outside of my bailiwick. I'm going to take the easy answer and say yes. I believe we get guidance there. Could be wrong, so help me out.
My lawyers will tell you very clearly that we're not your lawyers. So, compliance with state lending laws, and of course, every bank, depending on their charter and their regulatory oversight regime, like are you a Fed regulated, FDIC regulated, OCC regulated, it has slightly different rules, and those are always in control of the bank. We certainly have been running programs with lenders chartered in many states under the purview of all of the major federal regulators. So we have our experience and we'll share that, but I want to be careful that we're not your counsel. So when you talk to my lawyer, they'll give you a perspective, but they're also not your lawyer. And you should, have your own point of view and make sure, that one of the bank's responsibilities is to ensure from a compliance and legal point of view that the things we're doing on your behalf are compliant with the regulations to which you are subject. And that's a conversation with every partner. So we help a little bit, but I want to be clear that we're not, every bank needs to be doing their own analysis of those laws.
Great. And I would say, in the guidance realm, especially around the product is what I was referring to. That's been super helpful. So yeah.
Absolutely.
Okay. The next question is, do you have a credit mix target, i.e. near prime versus prime versus super prime?
Do you have a credit mix target, Barry?
Yeah, credit mix target. Again, I'm gonna have to take a little bit of a pass on this one. For us, I would have to talk to our lending officer for sure, because I don't want to disclose unless I'm close to what I'm talking about.
Yeah.
So, obviously there is, but what that is, I don't know if I'm privy to share. So I'm just going to take a pass on that one. Sorry, whoever asked that question. So.
Yeah. So I'll just say, as I kind of mentioned earlier, each of our partners can specify really less a mix and more of a portfolio level losses with which they're comfortable. And we'll help them figure out where they should make a cutoff, because there's a question of overall portfolio risk, which is really a question of mix and a question of the maximum risk tolerance that you have. And we have a lot of history on the mix, and then we can help you set a maximum risk allowed for a loan to be approved, and then, adjust as we go. We have regular meetings with all of our partners. And so we'll look at, is the ROA right? Is the loss portfolio prediction right? If it gets to be a little high, do we need to tighten it up? If it's performing really well and we could get some more volume, if we were a little looser on the risk side and it would be properly priced, maybe we want to do that. So that's just an ongoing dialogue we have with every partner that they can manage.
Yeah.
Great. Well, I think we have time for a few more questions.
Yep.
How many loans were originated by Upstart in 2019 and 2020?
Yeah, you'd think I would know that off the top of my head. I'll just tell you that we were coming out of COVID, so Q3 2020. You can look at our S1 filings and see a lot of this information publicly, but we were originating $200 million a month across all of our lending platforms. And I would be really clear that Upstart is not an originator, so we don't originate any loans, but the banks that we partner with, like First Federal of Kansas City, we're originating on the order of $200 million a month towards Q3. And then, we're announcing earnings in about a week. So if you want to hear how Q4 went, there'll be some more specific numbers provided then. But it's a pretty sizable volume, and each of our partners is kind of dictating what portion of that they'd like.
Great. Are all your consumer products now originated through Upstart, or is part of your portfolio still originated through previous LOS?
Yeah, we're originating part of our HELOCs, and then some of our auto lending is still from our own LOS. So the unsecured through Upstart, and then we're still originating those on a different platform.
I'd say that's pretty typical. Although, Barry, we're going to come and talk about the auto as we started our history in personal unsecured and have a lot of volume and partnerships there. We launched an auto platform for our partners in December of last year, and have been slowly growing and expanding that. I think we actually brought that platform to Missouri last week, so we're getting to cover your area a little more fully, and so that's that's one of those things that we're looking forward to expanding through the new year.
Yeah.
I think we have time for one more question. Was there additional regulatory scrutiny when your bank introduced this product, and how did you deal with it?
Yeah, that's a great question. Yes, well, is there additional regulatory scrutiny? Yeah, most definitely. And the way we dealt with it is our chief risk officer is just outstanding at kind of positioning what we're trying to do, and the comfort level for the examiners with how we're reporting it, how we're managing our risk there. So from my end, it was more of, here's the opportunity on the table. From our CRO, he was able to build a package for them. And then, when we had our last exam, which has only been not many months ago, the first exam we had, it was a bit of an issue because, Upstart was still young. This relationship was young, or at least it was new to us. It was like, hey, what are you guys doing here? Our CRO was very diligent, and Upstart was very good at providing us with the documentation, all of the nuances we needed. I think when they came back around the next time, it wasn't even a blip on the radar. They were totally fine with it. So hopefully that helps answer the question somewhat. The burden for us was kind of startup burden, if you will, there. And then after that, it's just like, we totally get it and we understand. And Upstart was more of a known commodity to them as well. So
yeah. And I just say we do our best to have all the things your regulator is going to want to see, and all the diligence materials prepared and packaged, because we've been through this ringer, as I said, with all the major federal regulators. We've got banks that are originating. So, we try to be as helpful as we can. That's ultimately your relationship with the regulator. We're not trying to supersede that, but we are trying to help you meet their requests and requirements. And then I saw one other question I'll answer. I think we got 1 minute left, which was, who sets the rates? And just to be super clear, Upstart's responsible for predicting the risk of a loan. Each bank partner helps us by setting what they would like to price certain risk at. So if it's a 2% likelihood of default, what's the interest rate you'd like to charge? And our model will take your pricing strategy and apply it to our risk analysis of the loans. Same thing with origination fees. They're up to each bank. Some of our partners do charge. Some of them don't. Many of them actually don't charge origination fees at all. So that's totally in control of the lender. And we're really taking the role of underwriting the risk prediction, right? How likely is this person to default and prepay, and then allowing you to set the pricing strategy, fee structure you want associated with that risk, so it can hit your own economic objectives. And that's totally up to the lender. And we work with you on a regular basis to update that if required.